Mark and I were talking about Bitcoin and, well, crypto in general, but the whole narrative and storyline that has been going on for about probably almost 2 years now with AI, artificial intelligence. Actually, since ChatGPT came out in November of 22, and how the narrative has been around AI and semiconductor chips and this, that, and the other. And we were talking about all of a sudden the resurgence of crypto and in particular Bitcoin because of the halving. And Mark made the comment, he said, I think this is bigger and more significant than AI. And over the last couple weeks, I've thought more and more about that. And recently I watched this interview with Michael Saylor, who is CEO of MicroStrategies, and the significance of what Bitcoin is. And when he said it is not a currency, but rather a store of value, it would be like you going out and buying real estate, and you're storing value there, and you get a return out of it over time. And it really hit me, and I got to thinking, that's really what this is. I mean, Bitcoin is only 21 million coins, and there only will ever be 21 million. There is no committee who dictates what goes on with it or what happens with it. And so it is so independent of, sorry, I'm making my breakfast, of really anything we have. They'll make more real estate. They'll make more NVIDIAs. They'll do a 2-for-1 split on that stock at some point in the future. It fluctuates based on market sales, the demand for chips, this, that, and the other. Whereas Bitcoin is 21 million, no committee, no, it is based on supply demand. And right now, with everything that's going on with hyperinflation in Argentina, Venezuela, all these areas, all of a sudden you have this just massive need for a currency that will rise with inflation. Well, if you look at the US dollar, if you keep your money in a savings account, on average, you lose 10% buying power each year. And what I thought was really significant was that when you sign a 5-year contract with somebody you provide a service and receive X dollars, the number of dollars buying power that you sign that contract in today, based on what the past history recently, especially, that buying power of that dollar in 5 years will be much less. So you're actually losing money on a contract that you sign. So the question is, what asset could you buy that will go up as as they pay you, as you sign the contract now, you have an asset you're being paid with that actually goes up in value 5 years from now. And the argument right now is it's probably Bitcoin. And if you're sitting, have a business and you have money sitting in your savings account or treasury account, and you holding US dollars, you're losing money, which means if you're a publicly traded company, you're actually doing your stockholders wrong. But also, if you're just a privately held small company, you're losing money. Would you be better to have operating capital and then that long-term money in an asset that is going up? Now, full disclosure, Bitcoin is volatile. It goes up and down, and recently it has accelerated in its volatility on the upside. But we have seen in the last 3 years the volatility on the downside insignificantly. So it is, but with what's coming about in April with the halving, the less Bitcoin being produced, I think there's 900 Bitcoin produced right now each day. That's going to get cut into 200 or 450 Bitcoin by the end of April. So there's less being produced, and there's more people holding it for longer periods of time. And so I guess the point I'm making here is Bitcoin is more than just this technological fad, but more it's a store of value. You can move Bitcoin across borders. You can take Bitcoin on vacation. You can't really take gold, or you're gonna get pulled over by not immigration. They probably, and you can move it around, whereas you can't move commercial, real estate. You can't move these other asset classes that have been deemed store of value. If you moved, over $10,000 in cash and got on a plane with it, they would question you, where you got that money? Bitcoin, they don't. So I guess this is what I'm trying to say here is start thinking about how you're storing your money for store of value, how you're holding it, and the ability to move it around with ease. And it may bring you to that whole Bitcoin element, that whole idea of maybe you should hold Bitcoin or have a portion of your assets in Bitcoin. That's where I think this is all headed. And in the near future, the financial future, as my chiropractor asked me the other day, he goes, how the hell does a U.S. get out of a $34 trillion debt situation? Not the way, higher taxes, make more money. That's not going to work. So how do they get out of that? And I think that's when you start to question, what is the power, what is the U.S. dollar's ability to be be a strong currency? And unfortunately, if you hold it year after year after year in a savings account, you're losing money. So is Bitcoin another way for you to store an asset, your money, and get a return?